Student loan payments are set to resume in October after a 3-year freeze, and today we're going to talk about what would happen if you just didn't pay. As you might imagine, it's not the greatest idea, though President Biden is working on some plans to help borrowers that have trouble paying. We'll go into all of that today, and also we're going to give you some options on what to do instead. Let's start with the definitions. Let's say you have a student loan, you get your billing statement, and you decide to not pay. What happens then? Sooner or later, you're going to be in default. How soon that's going to happen depends on the type of loan you have. Private loans, like those you get from a bank, and federal Perkins loans can be declared in default the minute you miss that first payment. Federal student loans cannot be declared in default technically until you've missed 270 days of payments. That's about 9 months. But even that long grace period doesn't buy you much leeway. So what happens if your loan is declared in default? Loans in default are reported to the 3 major credit agencies, and that's never a good thing because it will hurt your credit score and it will prevent you from getting other necessary credit, like a mortgage, an auto loan, or a credit card. Once the loan is in default, the entire unpaid balance becomes due immediately, without options like forbearance or other repayment plans. The government can refer you to a collections agency, and they can actually take money out of your paycheck or other government benefits that you receive in order to recoup what you haven't paid. And while your school won't come to your house to repossess your diploma, you will have trouble borrowing any further money from the federal student loans program to further your studies. Now, you might be panicking, thinking that all of this will happen to you in October if you can't pay. The good news is that you do have options because President Biden has introduced some new plans to help borrowers who have financial trouble. To find out more about this, I spoke to Jillian Berman, MarketWatch's student loans reporter, who has been keeping a close eye on the situation.
At the same time that Biden came out and said, we're taking another stab at canceling student debt, he also announced some measures aimed at making it easier for borrowers to return to repayment when payments on federal student loans resume this fall. So one of these things was the on-ramp, so-called on-ramp. And basically what this does is it protects borrowers from the most severe consequences of not paying their student loans for 12 months after payments resume. So that means that if you don't make a payment during this time, they're not going to tell the credit bureaus, they're not going to refer you to collections. But interest will keep accruing on the loan. And a point that President Biden made, that other Biden administration officials have made about this on-ramp, is that it is not the same as the pause. And if you can afford to make payments, you should. Basically, it's only protecting borrowers from the harshest consequences of not paying your student loan. The clock is just going to keep ticking if you don't make payments during this time.
So the on-ramp is not really a long-term solution. It's more like a ticking bomb. Last year, the government announced another plan to help borrowers that had defaulted before the pandemic. Under that plan, called Fresh Start, defaulted borrowers became current. That means that their loans will return to in repayment status and that the record of the default will be removed from their credit report. If you want to take advantage of this program, you have 1 year after the payment freeze ends to take action. Most borrowers with federal student loans have a lot of options to avoid going into default, even if their income is low. Things like income-based repayment plans allow you to pay back your loans over up to 25 years. And depending on your income, your monthly payment can be as low as $0, and you don't risk going into default. But to qualify, you have to apply. If you want to know more about what options you have to avoid default, like income-based repayment plans or forbearance, make sure to check out our other Explainomics episodes where we go into detail about those options. And always the rule of thumb is, it's better to call your loan servicer or to visit studentaid.gov than to ignore your payments. And if you want more content on student loans, make sure to check out our playlist and please subscribe for more Explainomics videos, and we'll see you next time.